we're going to talk about the variances. So if you have this handout, take it out. If you don't, write it down or take a screenshot of it and have it in front of you. Try to work this out without this video. You become better at it by doing it yourself instead of watching me do it. So we have actual cost information and standard cost information. It's pretty important that you make sure you understand what's actual and standard so you don't go and put a standard in for actual. And it's just a matter of reading the headings, but as you move around it can be easy to pick up the wrong number. So we're just going to kind of go down through it and put it where it goes. So notice I have actual quantity times actual price. I'm going to do the same for labor, although it's actually actual hours times actual rate, actual hours times the standard rate, and standard hours allowed times the standard rate. As far as overhead goes, I'm going to have actual, I can spell, I'm going to have flex budget, and I'm going to have applied over here. All right, so as I go through these, I'll just kind of plug them in where they go. The cost of materials purchased and used, that's under actual, so that's my actual amount. So I have 152,000. Then it says pounds of materials purchased and used, so my actual quantity is actually 21,420. And so I think it's important that we make sure we get our denominations all the same. So this is pounds. Okay, and in labor, I want my amount to be in hours. So I don't multiply. Some finished goods times the price per pound. All right, so I have cost of direct labor of $187,000. So that's a total. So I'm going to put it down here in the total. So I'm going to pause here. I can figure it out. Okay, so I'm going to put my totals in these yellow boxes. 187,000 for hours. It says hour or for the cost of direct labor. So my hours of direct labor 13,800. So my actual quantity of direct labor was 13,800. Cost of variable overhead. So the actual variable overhead is 4,600. The actual fixed overhead was 12,800, and I'm told that my actual volume of production is 6,200. So if I go over here to standard quantity allowed, I want my actual finished goods times my standard input. Okay, so that's the standard quantity allowed. That's this box. So here, I guess I can't write my text. Okay, but anyway, that's this, not this number. So these two go together. So the standard quantity allowed, that's that. Actual finished goods times standard input each. So I'm going to actually move my standard price over here. Okay, so my actual volume of production is 6,200. I will need that for this one also. And I will need that for this one also. Okay. All right, so I have my 6,200 is my actual finished goods. So remember again, do not take price per pound times the number of finished goods. So really work and fight with making sure you have the units taken care of. All right, so my budgeted volume production is 6,000 units. We're going to actually use this in just a second, but direct materials is 4 pounds per unit at $7 a pound. Sometimes the problem will actually have that multiplied out and taken 7 times 4 is 28. And you'll want to put 28 up here, but notice it's $28 per unit, $7 per pound, and my quantity is in pounds, not units. So I want my price per pound of $7. Okay, and I should put that in the correct spot of standard price. So my actual quantity here, I should have put those in 2 different places. And my actual quantity here, I should have put that in 2 different places. Okay, So Excel doesn't set up really good, but basically I'm going to take my actual quantity times my actual price to get that. So now I'm going to back into my actual price. So if 152,000 total, I just divide it by the quantity of pounds, and I get my labor rate, or my materials pounds rate. The price per pound is $7.10. I'm going to do the same thing for hours. And again, you just back into it. So don't create something like there's no template for this. Sometimes they will give you this number and this number. You have to determine that number. So the number of pounds times the price per pound is always, in all cases, every time you will ever encounter it, the total price. So if they give you the total, put in the total and back into the price per pound or the rate per hour. If not, compute it. All right, so now I can actually do this one. Okay, I know that 4 pounds per unit is the standard amount. So if I read this, it's the actual finished goods times the standard input each. So I need 4 pounds. Okay, and I also know this, that I'm going to just put this down here. So I know 6,200 times 4 is my standard quantity allowed. So 24,800 are those two numbers multiplied together. So my standard quantity allowed is actual finished goods times standard input each. So if you're writing this down, put these two in brackets. And my standard price is 7. Okay, so whoops. All right, so my 24,800 is the standard quantity allowed, and the price per pound is $7. So I have 173,600. So this is what I actually spent. This is what the amount I bought, what I should have spent for it, and this is how much should have gone into each finished product. So now I can figure out my variances. So the 152,000 minus that is 2020. Maybe I should do it this way. So 2060, that's unfavorable because I spent more than I should have spent. And this one, I don't care which do. Yeah, I was just not putting U and F. I was letting the positive be favorable, the negative be unfavorable. So this one is 23,660 favorable because this is how much I should have used for what I made, and this is what I did spend on what this is what I should have taken, 24,800 pounds at $7 each, but I took 21,420, so I took less pounds than I thought I should have, so it's favorable. Okay, we'll go back to the journal entries in just a little bit. My standard price per hour is $14 an hour. And it says I should have taken 2.25 hours. So what I did make, 6,200 units, should have taken 2.25 hours. So I have 13,950. All right, so now I can figure out my variances here and my total. So 13,800 hours times the standard rate of hour of $14 an hour is 193,200. My hours that I should have used to make 6,200 at $14 an hour is 195,300. So now I can figure out my variances. My variances are 6,200 favorable because I spent less for labor than I should have spent, and my labor efficiency variance is also favorable because this is what I should have spent making what I did, and this is what I did spend making what I did. Or you can look at it this way. This is how many hours I should have taken. I only took 13,800, so I have favorable. All right, variable overhead is based on 6,000 units. So notice that my estimated overhead divided by your estimated base going to do this for both fixed and variable. So here I'll do variable first, and then I'll do fixed. All right, so my estimated overhead is variable overhead based on 6,000 units, standard cost information. $3,000 divided by your estimated base of 6,000 units. So I take the 3,000 divided by the 6,000 units, and I get 50 cents, which they already gave me, but not all problems will. And this one, I have $12,000. $12,000 divided by 6,000 units is going to give me the $2 per unit. Okay, so this one is my applied, so I have 6,200 units that's going to be applied at 50 cents a unit for variable overhead. And for fixed overhead, $2 a unit. Okay, so now I can take my 6,200 times my 50 and my 6,200 times my 2, and I can add those all up. And I get 15,500. Okay. Over here, I know that the flex budget is variable, so the variable is the same. And fixed is fixed, so I go down here and I see I should have had 12,000. So 12,000 would have been my budget amount I would have used. So my flexible budget is 15,100, and my actual I spent is 17,400. All right, so now my variances. This is my overhead spending variance is negative $2,300 or unfavorable $2,300 because I should have spent under my flexible budget 15,100 and I did spend 17,000, so it's unfavorable. And my overhead volume variance is 400 favorable. So again, I can look at this and say, how many did I make? I made 6,000 units. I'm sorry, how many should I have made? I should have made 6,000 units. How many did I make? 6,200 units. So I made an extra 200 units, so that's good. I made an extra 200 units, and my fixed overhead rate is $2 a unit, so 200 units times $2 is the $400. So now let's talk about your journal entries. I'm going to actually move this over there so I can get the journal entries going. Okay, so I know that I debit WIP. I know that I credit raw materials, or in your book, I believe it does direct materials inventory. All right, WIP is always the standard amount. Direct materials inventory is always the actual amount. And then I record my variances. This one is, notice it's the dollars amount, so the price is varying, so it's the materials price variance. And the materials price variance is unfavorable, so unfavorable variances are debits. So I have 2060, I better put that in positive. And this one's my materials usage variance, or materials quantity variance, it might be called. So I have 23.6. So let's see if we balance. And I have debits of 175,660 and credits of 175,660. So I'm good. So there's your journal entry. I'm going to go down here. I'm going to do the same thing. I've got WIP of the amount that's standard quantity, because this is a standard cost system. I'm going to credit direct labor. I would prefer that you debit direct labor payable or wages payable. And it's always going to be what I actually pay, because people tend to want to be paid based on the actual work they did. These are both favorable variances, so they will both be credited. So I have my labor rate variance, and I have my labor efficiency variance. And my labor rate variance is 6,200, and my labor efficiency variance is 2,100. And so now I'm going to double check that my debits equal my credits. So I have debits of 195,300, and I have credits of 195,300. So I'm good. And then the last one, I debit WIP, and I credit manufacturing overhead. I debit WIP for the standard amount. I debit manufacturing, or I credit manufacturing overhead for the actual amount. This one's an unfavorable variance, and this one's a favorable variance. So my unfavorable variance is debited. So I have manufacturing overhead spending, and my manufacturing overhead spending variance is 2,300. And then I have my manufacturing overhead volume variance. My overhead volume variance is $400. Okay, so now I can double check that I balance, make sure I've got them the right way, and I do, so I'm good. Don't leave this. Okay, so that is the extra one that I gave you.